This week was Fed week, so did the Fed do us any favors? We're going to dive in, we're going to take a look at some numbers, and we're going to see. Spoiler alert, the Fed did nothing on interest rates, and they were not expected to, y'all. But however, the future looks a little more bleak than that. So we're going to take a look at what is moving the markets and where the Fed might be headed in the near future. First of all, let's dive right into the numbers. Mortgage News Daily has a 30-year fixed rate conforming loan at 6.77% today, y'all. We were at 6.85% a week ago. We had seen a bit of a pause in attacks in Iran, so that gave us a little bit of a reprieve. We saw oil retract a little bit. Those attacks have now resumed, y'all, so this may be short term. We were at 6.60 30 days ago. The high for the last 30 days was on July 23rd, and that was 6.85%. And the low over the last 30 days was on the 6th of July, and that was 6.59%. There's the rundown on interest rates, y'all. Here's the thing. The Fed met yesterday. The Fed did not raise rates. They were not expected to. However, their next meeting, remember the Fed meets 8 times a year, their next meeting is on September 16th, and there is now a 63% chance of a quarter point hike at that meeting. That's based on Fed futures as tracked by the CME FedWatch tool. Everybody's got access to that website. That's not a paid service. You can dive in and look at that one. So the markets are expecting a 63% likelihood of a hike going into that meeting. So, y'all, it is you had 3 dissenting votes on the vote to keep rates steady. The remainder of the Fed was committed to keeping them steady, but you had 3 folks that wanted to see a hike of at least a quarter. The concern is those voices will become louder over the coming weeks and months. A lot of reason why the Fed should continue to pause and hold, though, y'all. When we looked at the CPI numbers and the PPI numbers that came out 2 weeks ago being much softer than expected, particularly that CPI report was a multi-year low. You combine that with today's personal consumption expenditures, this is the Fed's favorite read on inflation, came in better than expected, 0.1% up month over month, 0.2% was the estimate, so significantly better than anticipation on that report. Annualized core PCE is at 3.3%. You know, obviously that is above the Fed's target, but with some of the measurement changes that the Fed is making, specifically to money management fees, those have been outweighed in calculating this number. As we move forward with better calculations for that, y'all, we may see that number come down some, as much as 0.4. Well, that gets us back in the 2s. That gets us at 2.9 on the current number. So if we can get some cessation in energy costs, along with some of these better metrics for tracking how we calculate the personal consumption expenditures numbers, we may well get closer to a number that the Fed can live with. Whether that happens before the September meeting or not, y'all, remains to be seen. Just pray that we get some cessation and some normalcy in the energy markets so that we can get some bit of predictability back into the money markets. All that being said, y'all, we've only seen interest rates with all of this volatility move a little over a quarter of a point, maybe a third of a point over the last 30 days in either direction, both up and down. That's not a huge issue for a prospective home buyer, y'all. This is not a dramatic thing. And as we've always said on this video, refinancing is a thing. If you find the house that you love, that's the most important aspect of your house hunting journey. Not worrying too much about things that are beyond our control, geopolitical issues that move interest rates day to day. If we see an opportunity for you to save money on a refi, we can address that down the road after you have your house bought. So that's just not a big deal, y'all. It's just pushing numbers around and hitting some buttons on a screen, and the next thing you know, you got a cheaper mortgage, assuming the economy gives that to us. So let's not overlook the fact that we're going to continue to sell the mantra of dating the mortgage and marrying the house. Y'all, find the perfect home for you and for your family. We'll worry about making the money as cheap as we possibly can. And if we don't get it the way we want it when you buy it, we can certainly get it down the road when we see the market turn back in our direction some. And at some point, it likely will. So in any event, that is today's update. If there are any questions about where you think the market might be headed, or if you just want to have a conversation about it, feel free to give me a shout. Always honored to have your referrals. We do mortgages for a living here. Give me a shout and we will talk. Stay blessed, stay safe. We'll talk to you next week.